Dear all, just it would be nice if you can give me a confirmation if I'm audible with a yes or a no on chat. Thank you. Okay, all right. Thank you, Mr. Sivaraju, Mr. Sarfaraz. Okay, great. Okay, so in the meantime, I'm sure all of you are aware of what the topic of discussion is for today. Our speaker, Mr. Akella, will also be starting off with a presentation followed by a dedicated Q&A session. So for those who are there in our last month's webinar, I'm sure the session was very interactive. We look forward to something of the same style today as well. So I look forward to all of you participating actively with questions as well as we progress in the session. So I'd like to know what is your expectation from today's session. You can use the chat in the meantime if you'd like to. We will begin in about 2 to 3 minutes from now. All right, Mr. Mahadev has mentioned clarity on GST, ITC availability and employee-related expenses. All right, great. Thank you, Mr. Mahadev and Selva, to Bhaskar. So we will address this as we move forward with the session. I'm sure some of these pointers will be explained in the presentation itself. The rest of it can be taken up during the Q&A session. So thank you for the inputs. All right, noted. Also like to mention you can use the Q&A tab. You will be able to see it on your screen. You can put your queries over there as well. We'll be able to keep track of that on a better method. All right. Thank you all for your patience. Once again, very good afternoon to everyone. We will get started off. I'd like to thank everyone for joining us for yet another webinar. I'd also like to give special thanks to Mr. Akella A.S. Prakasha Rao, our chief speaker and tax veteran, for joining us on yet another session today. I'm absolutely glad to have you here with us, sir. I'm sure the session will be really helpful for the audience who are directly going to hear from you. So before we move forward, let me just introduce myself. I am Siddharth Nandakumar, and I handle product marketing for the company. So as we move forward, I'd like to give a small introduction about the company. Web is a 20-year-old company as of today. We were initially known as Wipro e-Peripherals, which was part of Wipro itself. We were, in fact, the peripherals division of the company. And in 2000, we became an independent entity. So from there on, we have evolved and we have multiple solution offerings as of today, which I will show you in the upcoming slide. So as you can see, we have three main solutions on offer: managed print services, digital transformation solutions, which covers two kinds of solutions on offer, as you can see, web GST and DMS. And thirdly, we have intelligent office automation solutions. Now, I'm sure you must be wondering what this is. I will quickly show this in the next slide, which will give you a little more idea. Serial number one, we have managed print services. We provide printing services for enterprise customers. Now, the business here is such that we deal with printing hardware based on customer requirement, and they would be charged per print. We also handle the complete asset and hardware end for the customer. So this is what we do with web managed print services. Let's move on to serial number two, that is uh, the intelligent office automation solutions. We offer the latest range of best-selling office automation solutions. Web is the authorized distributor alongside Ricoh Japan to sell Ricoh products in the country. We have a wide range of offering over here, right from multifunction printers, and we also handle delivery and after-sales support throughout the country. Let's move on to serial number three and four. As you can see, this is the digital transformation side of offering that we have. Serial number three that covers GST. I'm sure all of you are aware of what the solution is. We have an all-in-one solution for filing, reconciliation. We have built-in modules for e-way bill automation, e-invoicing. We have methodologies built for data preparation and validation as well. I'd also like to mention that we undertake ERP integration with our solution, SAP, Oracle, Microsoft Dynamics, and other custom API integrations as well. Aside this, we have a standalone solution called Managed GST Filing. We have an in-house team that would handle all your GST filing necessities, right from filing, data preparation, validation, and then we either give it to you for filing or we file it ourselves. Let's move on to serial number four, that is document management solution. This is an enterprise automation solution, which has two modules mainly: document repository, document storage, and workflow automation. With this, we are able to build tailored, scalable solutions for enterprises for all their business process needs, right from the HR end, that is employee records management, procurement side, procure to pay, management of change for chemical and pharma industries, and much more on offer. Quick view of our customers. Once again, I'd like to thank all of you for joining us for the session today. I'm almost done with my introduction. All right. So quick poll for the audience here today. Now, this session does not have a demo or anything as such of our product, but I would like to know if any of them are actually interested or if anyone is actually looking for a GST invoice solution. Let me launch a quick poll for the audience here. Dear all, I hope the poll is visible to you all. Would you be interested in a free demo of our GST solution? I would leave this poll for the next 1 minute. Those of you who are interested, our team will reach out to you in the next 1 week. And we will be able to schedule a demo based on your requirement and based on your availability as well. Please note this is a free demo. So you'll be sitting with our pre-sales executive on a one-to-one basis. All right. I would also like to mention that there is another poll right after this slide, which will cover the HR, the DMS end. Those of you who are interested in that can also respond to the poll. All right, thank you all for your inputs. I'll end the poll right now. Launching another poll for the audience. Would like to know if anyone is actually exploring a HR ERM automation solution at the moment. Please note that we also have HR audience here with us today. For those of you who are exploring an automation solution for your HR requirements, our team will be able to reach out to you for the same. Moving on, I will be introducing our chief speaker and tax veteran from here. Okay, thank you for your inputs. I will end the poll in another 10 seconds. All right, thank you all. All right, introducing Mr. Akella. He's an independent indirect tax advocate. He graduated in 1989 from Birla Institute of Technology and Science, that is BITS Pilani in Electrical and Electronics Engineering. He is a gold medal holder who completed LLB from Andhra University in the year 2001. Mr. Akella is a certified fraud examiner as well, but he is not. He worked in the Central Board of Indirect Taxes and Customs from 1994 to 2008, worked for BSR and Co, KPMG that is, in Bangalore from 2008 to 13. His major stints were with Toyota Kirloskar Motor Private Limited, Bidadi, from February 2013 to November 2016, and Biocon Limited from November 2016 to June 2021. Mr. Akella is also a member of indirect tax committees of various trade bodies like BCCI, CII, FICCI, and so on. He is also very active in writing articles in TIOL, Tax Sutra on various tax issues. Mr. Akella is also a speaker and panelist on various forums on indirect tax matters. He comes with more than 27 years of experience in the field of indirect taxes, with exposure in government, consultancy, and industries like auto and pharma. He has hands-on experience in GST, customs, FTP, SEZ, central and state excise, service tax, VAT, CST, entry tax, bonded warehouse, EOU, STPI areas in terms of regular compliance, investigations, audit, litigation at all levels, business transaction structuring for tax optimization, and supported in securing industrial incentives from state and central authorities. Mr. Akella is currently practicing as indirect tax advocate, assisting various clients on all aspects of indirect taxes at all levels. I take great pleasure in introducing him on yet another webinar. It is absolutely a great thing to have you here with us on yet another webinar today, sir. I'm sure the audience is looking forward to directly hearing from you. Mr. Akella, over to you.
Thank you. Good afternoon, Siddharth, and good afternoon to all the participants who have taken time to attend this session. And yes, setting the expectations also. It's good that I will try to fulfill your expectations by end of this session. And maximum time I want to devote for the question answer sessions rather than again reading out the legal provisions and other things. Siddharth, we can move to the next slide.
Yes, sir.
So the agenda for today is that basics of the ITC and certain important definitions and scope of supply and conditions when ITC can be denied or allowed, exempted supplies, conditions when ITC shall lapse. And these are the general points that I'm going to touch upon from the law. And then the points to discuss are the various aspects of HR related expenses, which is the central theme today. Next slide. So you all know that the input credit under GST is eligible only when you have an invoice or a debit note from the registered supplier, and you should have received the goods or services or both, and must have paid the consideration within 180 days. and the tax charged thereon is paid to the government by the supplier and return has been filed and it is reflected in the 2A. These are the important conditions one need to look at. Of course, for those from HR who are attending this session, maybe this may not be relevant, but certainly it makes sense for your tax people. And there is a requirement that why at all this slide has been presented over here, because it is not sufficient that you have received a supply, but you should make sure that you are in possession of the invoice also. And similarly, that you should make sure that the payment has been made within 180 days, and also make sure that your vendor has filed the return. So unless these things happen, your tax person will not be happy, because he will not be in a position to avail the input credit thereon. Next slide, please. So there are certain important definitions we need to keep it in mind in view of the discussion today, that there is a schedule 1 in the CGST Act, which says that when a supply is being made without even consideration also, then it is going to be taxable. So the circumstances under which it says that supply of goods or services are both between related persons or between distinct persons specified in section 25 when made in the course or furtherance of the business. So these are the very important words. So they say that the tax levy comes in when there is a supply between two related persons. So who are related persons? Again, there is a clarity in the law, which says services by an employer to employee in the course or in relation to his employment is going to be taxable supply. And in the schedule 1 itself, it also says that the gifts exceeding 50,000 rupees in a financial year by an employer to the employee shall not be treated as a supply of goods. And schedule 3 says the transactions which shall be treated as neither supply of the goods nor supply of services, in which it says that employer-employee relation and any services rendered as part of his employment are not going to be subjected to any tax. Next slide, please. So supply includes all forms of goods and services or both, such as sale, barter, exchange, license, rental, lease, or disposal, made or agreed to be made for a consideration by a person in the course or furtherance of business. So under the GST law, employer and employee are treated as related party. Now you know it. In the previous slide, I told that any transaction between related parties is going to be taxable. And now in the law, it also says that employer and employee are related parties. Hence, the transactions between employer and employee are going to be taxable. So we need to carefully examine in light of these directions that how each of these expenses are going to be taxed. Some more important definitions that we will see. Next slide, please. So expenses for personal use and those who are not incurred for business, you will not be able to get the input tax credit. Expenses in the negative and exempted list, you don't get the credit. And expenses which are not reflected in the 2A, you will not be able to take the ITC. Similarly, when expenses are partly for business and partly for personal use, only prorated credit will be eligible. And when invoice is not paid within 180 days, whatever the input credit you have taken is supposed to be reversed. And when invoice has been reversed by way of a credit note partially or fully, then the credit is not eligible. Next slide, please. So there are three kinds of exempted supplies are there. Supplies attracting nil rate, which are wholly exempt, and which are non-taxable. So these are important definitions for apportioning of the common credit. So whenever that the head office is receiving some common credits and then they are distributed and all, that we need to be watchful of these important definitions. Next slide, please. So there are certain conditions like when the credit is going to be allowed. So on motor vehicles and conveyances, credit is eligible only when these goods are put to use for further taxable services like transportation or running a driving school or giving them under lease. And the other incidental expenses also go with this provision. And the important condition is if the seating capacity of the motor vehicle is more than 13 passengers only, credit is going to be eligible. Below that, it is not going to be eligible. Similarly, for vessels, aircrafts, only for further supplies. Food, beverage, club membership, duty treatment, plastic surgery, rent a cab, life insurance, health insurance. These are all credit is eligible only when they are used for further supply, or it becomes obligatory for the employer to provide to the employees. But here also there are diverging views, which we will see in the due course. And services of general insurance, servicing, repair, maintenance, for further taxable supplies, the credit will be eligible. Similarly, sale of membership in a club, health, fitness centers, and travel is not allowed. And travel benefits only in case of business purposes, then it is going to be allowed. Next slide, please. So works contract for further supply only. Mind you, works contract is only in relation to immovable property under the GST law. And constructing an immovable property on own account, you are not entitled for credit. But if it is for further supply, then credit will be eligible. And composition scheme, credit will not be eligible. And non-residents, only for importation of the goods, the credit will be eligible in their hands. Otherwise, for the domestic expenditure, credit is not eligible for them. Personal use, credit is not eligible. And any goods which are distributed as free samples or gift, credit is not eligible. And goods lost, destroyed, stolen, or written off, credit is not eligible. And fraud cases, credit will not be given. And the restaurants, when they are adopting the subsidized rate, credit is not eligible for them. Next slide, please. So there are occasions when the ITC lapses also. When the business is closed down, registration is surrendered, the balance ITC will lapse, and post-sale discounts, you will not get the ITC and it will lapse. And short supply and goods lost in transit, and then pre-operative period rental services, credit will not be eligible and it will lapse. Next slide, please. So now we come to the HR related expenses. So line by line that I will be just discussing. But if anybody has got any kind of a doubt, they can pass me and raise their questions either in the Q&A or directly also if the moderator permits. So the first point is joining bonus to the new employees. So whether GST is applicable on this aspect.
Sir, I'm sorry I'm interrupting you in between.
No problem.
Since you had mentioned, right, like obviously we have both HR and people from the finance and tax end. I'd actually like to know how many are from the HR and how many are from the tax end. So let us launch a quick poll so that it will give us an idea also to proceed.
Sure.
So audience, I hope you're seeing this poll on your screen. So please use the poll so that we understand what kind of audience we have today. I'm sure the understanding is we have a diverse audience today, and others could be admins or people from the IT side. We can have them as well. All right, so we have most of them are obviously from the tax end.
Yeah, but when I am going to discuss each of these points and all, that if anybody has got a doubt, then they are free to discuss on the spot. They need not wait, or if some query is there, that they can post it in the Q&A,
yes,
which I will definitely answer.
Okay, this has given us a good understanding of how the audience is. I'll anyway share the results so that our audience also knows how exactly it is. All right, so you can move forward.
Yeah. So the joining bonus to the new employees here, what is that at the time of offering the job, that because that he is going to join, that the company is willing to pay him some quantum of money as a joining bonus to him. So in this, there's nothing quid pro quo wherein that because that they are giving it, that he is rendering some services. So the service provider, service recipient kind of a relation, or any kind of a service underlying in it is not present, and this is a pure transaction in money. Hence, there is no GST applicability on this. Incentive or performance bonus to the employees. So when the employee exceeds the expectations or reaches the expectations, that the company will be grading them at the end of the performance cycle, and as per the company policy, the bonus will be distributed to them, and the bonus is going to be the distribution out of the profits that the company has earned. So in this case also, because it is partaking the color of salary, there is no, and moreover, it is forming part of the employment agreement also. So there will not be any GST levy on it. Then the subsidized or free food given to the employees. So there is somebody who is asking in the chat box that he wanted to have a clarity on the canteen expenses. So there are many ways in which a canteen in a company setup can be run. So we need to examine the full facts of each and every category of it, and then only we can come to a conclusion whether the running of the canteen is going to be a cost to company on the input side, and when the employees are paying for the food that they are consuming over there, then what is going to be the tax treatment of such an expenditure. So here what happens is that the Factories Act might have mandated that running a subsidized canteen in a factory is a must, and it is a condition. So you might have also seen the GST law that when something is mandated under the law, then ITC cannot be denied. But the problem here is that when the canteen supplier, whether he is engaged by the company in his individual capacity, or he is acting as a company's employee, and then the company only is incurring the expenditure towards the cost of the inputs that they are using it in running this canteen, and how the canteen food is being served, whether it is going to be given free or at a subsidized rate. And another point also, which is important consideration, is whether the company has been declared as a factory under the Factories Act. So considering all these aspects only, one can come to a conclusion whether the subsidized food which is given to the employee on the subsidized amount which is collected, whether the company will be liable for uh, paying the taxes or not. So for a detailed discussion of on this particular point alone, that there is an article in the Web Digital blog, that if somebody is interested, that you can please refer to that, because that it's a subject in itself that it will take some time. If there are any specific queries, definitely I'll address it. But otherwise, I would like to move to the next point. So sponsorship and training related expenditure. So when the company is sponsoring an employee, they will be incurring some expenditure, and there will be conditions from the employee saying that you may have to serve the company after completion of your training on the sponsorship event for certain duration of the time, like that. And with that conditions, the company may be sponsoring that particular employee or meeting the training expenditure of that employee. So in such a scenario, what will be the GST treatment of it? If you see on the input side, when the company is going to make the payment to the sponsorer or the person who is training the employees, then certainly it is going to be a taxable expenditure, and the GST is going to be taxed on it. So if the sponsorship item or the training is in or in relation to the company's activities, then certainly the company can avail the input tax credit on it. But when it is given free to the employee, the employee is going to get the benefit, but he is not going to pay anything from his pocket. So will it be treated as a free thing that has been extended to the employee? What we have to see is that if it is forming part of the employment contract, that during the employment with this organization, the employee will be put on the sponsorships or trainings in order to enhance his employable skills, and then he should be using such skills for discharging his duties. If such kind of a wording is emanating out of the employment contract, in such a scenario, on the input side, you can avail the input credit, but on the output side, that there is no GST that requires to be paid by the company. That is, it need not be counted towards the 50,000 rupees of gift which the employer can give to the employee during a year. That we need not really count it for that purpose. I think I am clear. I am moving on to the next point, club or gymnasium facility. So, this particular facility can be again can be given in multiple ways. That the company itself may be running the gymnasium in their office premises, or they might have taken the membership of a club or a gym outside, which they are giving it to the employee. If that is the case, if the company is taking this membership for the employee and they are paying it, then certainly the input credit is going to be denied to the company, because it is not in or in relation to the company's business to join a club or a gymnasium. Hence, the ITC is going to be denied in their hand. And on the output side, when such a free benefit has been given or a perquisite is given to its employees, whether this is going to be subject to GST. So there are two kind of an arguments to this particular point, that when on the input side, when the same is denied, then on the output side, there should not be any kind of a demand for the GST, because GST is a value added tax. So only when there is any kind of a value addition on that portion, only the GST is going to be applicable. So right at the time of purchase of that particular club membership or the gymnasium facility, when the credit has been denied, then when such a facility has been freely given to the enjoyment of the employee, then there cannot be any GST levy on it. Then moving on to the next point, mediclaim to the employee. Standalone if the employee is covered by medical insurance, and if such an insurance is mandated under any law, because the company is indulging in hazardous nature of any processing, manufacture and all, and there is a mandate under any laws which the company abides by, that the employees who are working in that organization are to be covered under some medical insurance, then certainly the input credit is going to be eligible. But otherwise, this is going to be disputed. And for the family, certainly it is going to be a contentious issue. And the extended family, that is parents and the in-laws, is certainly going to be out of GST, that you will not be able to. But why at all that we are mentioning these 3 points over here is, there are many ways in which the mediclaim is structured in companies. Sometimes it so happens that the company only will be incurring the entire expenditure and the insurance facility will be given to the employee. In some cases, a partial money recovery will be there from the employee. And for the extended family, certainly the employee only will be paying it, but initially the company will pay to the insurance company, and they will be recovering this insurance premium from the employee in some equated monthly installments. So in such a scenario, there can be doubts that whether the GST levy is going to be there or not. So for it to have a clarity, on the ITC front, on all the 3 sides that I have already told you, that mediclaim to the employee, if it is mandated under any law, then certainly input tax credit is going to be eligible for the company. And for the family and the extended family, certainly ITC is not going to be eligible for the company. But on the output side, when there is a partial recovery from the employee, then it will be deemed as a pure transaction in money, because in equated monthly installments, when the company is recovering this premiums paid, then it is a pure transaction in money, hence no GST is going to be applicable. But however, in very stray cases, some companies are charging small interest amount on the reimbursement being sought from the employees for putting this mediclaim insurance expenditure. So in all such cases, then interest is going to be subjected to GST liability on par with the other commercial arrangements. And then group mediclaim policy also, if it is mandated under any law, then only the ITC is going to be eligible, otherwise not. Similarly, accidental insurance policy is also of the same nature. If it is mandated under any law, then only it can be eligible. And uniform shoes, safety gear, etc., which is provided to the employee, normally these are given as part of the employment, and they will be used while discharging their duties. So on the input side, when the company buys the uniform, shoes and safety gear, yes, they are in or in relation to their business. Hence, ITC is going to be eligible in the hands of the company. But when these items are given to the employee on free basis, then there is no requirement for collecting the GST thereon. However, there will be cases when the particular item is lost by the employee, and the company doesn't want to tolerate such an act, and they want to levy small kind of a fine or penalty on such employees. And when they recover such fines and all, whether there can be any GST on it. So for that, the revenue authorities are taking the view that since the company is tolerating the act of loss by the employee, then it should be subjected to GST. But it is a kind of a far-fetched argument to make, because it is a kind of penal levy which is being levied on the employees, so that in future they will be more careful with the free gadgets which were issued to them and which are required for them to discharge their employee duties. Hence, in such cases, levying a GST on a penalty is not envisaged under the law. So it cannot be termed as tolerating an act, because no company wants the employees to lose the safety gear and pay a penalty. So in the unfortunate event of unintentional loss by the employee or mishandling, then there is a penalty. So for penalties, there cannot be a tax on it. Hence, one can adopt such an argument. Of course, you might have seen some of the advanced ruling have gone against this kind of a position, but the position is reasonable and it can be taken. We'll move to the next slide.
So, sir, I actually have. I just wanted to specify this. Ms. Vrinda had asked if you can re-explain training part. Since you are in the same slide, I thought I'd mention. You can take it up later if you'd like to.
Yeah. What is the question? Training.
So you were actually talking about training, right? So she had asked, can you please explain training part again?
Yeah, sure. See, when a employee has been sponsored for particular training, the company is going to incur the training expenditure, and the training is going to be free to the employee. So for every transaction, we got to see two sides of it. So when the company is incurring the expenditure, training expenditure, by paying the training fee or some sponsorship amount or whatever it is, definitely the company is incurring such an expenditure because it is in furtherance of their own business. Hence, input tax credit is going to be eligible on such an invoice, which the company is going to receive from the person who is conducting the training or the person who is running that sponsorship. But on the other side, when it has been given to the employee, and the employee is the person who is getting a benefit also in addition to the company, whether there can be any GST levy on the output activity, because there are two things here. Input activity is the training being given by the training company to this company's employee. The second one is the company is giving such an opportunity to its employee. This is an output side. The first one is on the input side. So what I'm telling is on the input side, the credit is going to be eligible because the entire expenditure is in or in relation to the furtherance of the business for the company. Hence, the company can avail the input credit. But on the output side, when such a training has been extended to the employee, that is the output activity. On that, GST need not be charged because it is forming part of the employment arrangement, and it is during the course of the employment the employee is eligible to attend the training. Had he been not your employee, then the company would not have incurred that expenditure. So with that logic, we can always say that it is forming part of the employment arrangement, that the employer is going to organize certain trainings and the employee is going to be sponsored for it. And then the employee has to enhance his skills and use it for doing his work better. So that's how it is. They justified. Hence, on the output side, there is no GST, but on the input side, the input credit is also going to be eligible for the company. I think I'm clear. If she has got any doubts, she can pose additional questions. Not a problem. Yeah.
Yeah, Viswanda, hope that clarifies your doubt. Yeah, so you can move ahead.
Yeah. So another thing is that the subsidized or free conveyance given to the employee. So here also that if it is mandated under law, then the input credit is going to be eligible, and on the output side, that GST need not be charged. But the biggest problem is that there is no clarity whether really the conveyance is mandated under any law. In Karnataka, at least for the IT/BT companies, there is a government regulation which says that women employees who are staying outside the regular office hours are to be provided with a secured conveyance to drop them at their homes and also for their pickups. So by that law, we can take a convenient position, at least in Karnataka, for the purpose of the female employees only, that the input credit can be availed by the company. But unfortunately, the same largesse were not extended. If a male employee works late in the night and wants to avail the company cab facility are like that. So that is one aspect of it. The second one is that for the normal commute also, certain companies are providing subsidized conveyance, means that the conveyance cost per month may be 5,000 rupees. What the companies are doing is that they will be collecting a subsidized amount of 1,000 or 1,500 from each of those employee, and the employee can make use of the company bus service. So in such a scenario, whether there is going to be any output tax on the subsidized collection from the company's employee will be the question. But here also, we have to see many other aspects also before concluding on the taxability of it. But just to touch upon certain points, that some companies are engaging the services in such a way that the operator is going to come with a app-based service, wherein the company employee is going to opt for the bus on a daily basis, and depending on the number of employees opting in one particular route, that the bus will be decided, and those employees can opt for in that particular route in that particular time, and then the facility can be availed. And for each trip, maybe that the company will be collecting the full amount or partial amount or whatever it is. So in this, there are two arrangements, that with the bus operators, the company will be paying it in terms of the number of kilometers or the duration. So there are several ways in which this input side operation can be structured. But definitely, the service being availed by the company is for the furtherance of the business of the company. Hence, input credit is justified in the hands of the company. But on the output side, when subsidized collection or the full amount is collected from the employee, the biggest problem will be the employer and employee are treated as related parties under the GST. Hence, that amount is not going to be acceptable as assessable value for discharge of the GST. So the problem will be that when a related party transaction is there, so unless the recipient is entitled for the full credit of the GST charge, the declared value will not be treated as market value. Hence, you have to go by the valuation principles, which are a bit complicated. But for ease of our understanding, we can consider that whatever is the prevailing market value for such a trip from company to the employee's home, whatever is the distance, for that, in the outside market, without having any kind of a relation, if somebody wants to engage a bus or a vehicle or whatever is the kind of a vehicle the company is providing, a similar vehicle, what is going to be the normal charges? So on those charges, GST will be payable, but not on the subsidized recovery the company is making, because the subsidized recovery valuation method will not be acceptable for the department because of the GST law, which says employer and employee are related parties. Hence, this relation is influencing the price. That is the reason the company doesn't want to recover the full expenditure, but is giving some kind of a benefit to the employee by recovering only a partial amount. Hence, on the partial amount, GST cannot be charged. So it should be charged on the full amount. So who will decide the full amount? So we have to do some market research and then establish that this is the nearest price for it, and on that GST is payable by the company. That's on the output side. And cash bonuses for successful referrals by the employees. So here also, you can say it's kind of a manpower service, but the thing is that the employee is a not manpower service agency. Unfortunately, this kind of a definitions used to be there in the erstwhile service tax regime, wherein that they used to say that who can be said that he is a manpower service agency or who is a chartered engineer. Such a kind of clear definitions were there in the erstwhile service tax law. But unfortunately, we have copy pasted the entire law, but not certain key definitions, which are leading to all the kind of a trouble. Now, in this particular case, when an employee refers another person and the company is able to successfully recruit that gentleman, and in such a scenario, the person who had referred that successful recruit is eligible to get some kind of a cash incentive from the company. So the authorities are viewing this entire activity as manpower recruiting agency kind of a service under the GST, and they want to levy a tax on it. Unfortunately, this particular point is not part of your employment letter also, wherein we can always say that as part of the employment that this particular person is referring his own known resource who is going to be useful for the company. But if you take a larger picture of it, then it can be justified, because the employment contract is not one single document which the HR gives to the employee. It is going to link to several other documents which the company will be having in its position, wherein this referral bonus aspect is also one of the company's policies, and as per that policy only, the employees are going to be paid this cash bonus. So the company always can take a position that this referral bonus which has been given to a successful referral by an employee is part of his employment, and hence it should not be subjected to GST. And it is a very strong argument to take also. So one can fight his case based on that. Moving to the next point, that a company guest house facility to the employees. So this company guest house, some companies will be having the guest houses at various locations where when the employee is traveling, and that particular location, the guest house facility will be extended to the employee free of cost. In such a scenario, whether that giving that guest house facility to the employee, will it be subjected to GST will be the question. But if you see on the input side, how the company is incurring the expenditure on that guest house, that the guest house can be their own or rented, and the facilities may be maintained by the company or by a third party service provider to whom the company is paying on a lump sum basis. So all these aspects are there, but there on the input side, it is for the company to demonstrate enough to say that running the guest house is in or in relation to their business, because many of these employees will be frequent travelers, and there is a requirement for the to visit a certain place where the guest house is located. Hence, the company is taking advantage of such a position. Hence, the input tax credit should be allowed in their hands. That is some argument which the company can take it on the input side. But when it comes to the output side, that if the company is working with a field staff who are roaming around like a pharma company, wherein that they have got the medical reps who are supposed to travel a lot, and they will be checking in the company guest houses wherever they are eligible available, and then they will be spending the time over there. If such a kind of scenario is there, if you see that if the company guest house is not there, they must have checked into a hotel, and the hotel must have given a bill to them. And if the bill is given, whether the company can avail credit, the answer is simple yes, because the lodging is allowed, but boarding is not allowed. So if the split bill is there, the company can certainly take the ITC on such bills given by the medical reps. If in the alternative, if the company itself is running this kind of a guest house, then is there a requirement for charging the GST? So when the company is taking this service from a third party service provider, when the GST is eligible as a ITC in their hands, then if the company is running that same facility with their own expenditure, then I don't think that there is any kind of a justification to charge a GST for its own employee to reside in that guest house, or to add that consideration for the annual computation of that 50,000 rupees, which I told in my earliest slides, wherein that the company can extend up to 50,000 rupees worth of service consideration to its employees during a year. So we can take up such a kind of an argument that when a third party service provider is giving, ITC is eligible. So when the company itself is incurring that expenditure, then GST should not be charged. So that argument, we can take it on the output side. So on the recoveries that I mentioned, that like loss of safety gear, loss of identity card, parking fee, canteen, gym, crash facilities, and for non-observance of the company guidelines, there sometimes that there will be a recovery. All such kind of a things, you you have to individually examine that how on the input side the tax is flowing, and on the output activity how it can be structured. But in most of these recoveries cases, it is actually a penal recovery which the company will be doing from the employee, but not the actual cost of the goods. Sometimes it may be the actual cost of the goods. In such cases, that we have to carefully examine if it is the actual cost of the goods which is being reimbursed. In such a scenario, then tax is going to be applicable. But if partakes in the color of a penalty, then you can avoid the GST. Next slide, please. Siddharth, next slide, please.
Yeah, sir, I've moved to the next slide. It's not updated for you yet?
Yeah, no. So then issuance of employee stock options to the employees. So this employee stock option is a part of your employment agreement. Hence, there will not be any GST on it. And of course, perquisite taxation and all that under income tax that people know it. So it is going to be applicable. Hence, certainly it is out of GST. Then comes the contentious issue of notice pay. Fortunately, as we talk today, that even under the erstwhile regime also, this notice pay, service tax liability on it, tolerating an act, all these provisions are well versed with all the HR people and to the tax guys also. But now the clarity has emerged on it, and there is no service tax levy on it, because there is no underlying service. There are several judgments which have come. Of course, that there are some dissenting advance rulings which have also come, but ultimately the law is heading to a conclusion that one can conclude that there is no service tax liability for the notice pay recovery. Somebody had used the word bond breaking. Yes, it is exactly bond breaking means notice pay recovery only. So there is no GST on notice pay recovery in the GST regime also. Conclusively, we can say that. And then staff welfare expenses, annual outing. If the company is organizing an annual outing for its employees, then will there be any GST on it? Again, this aspect has to be examined from two ends. One, when the company is incurring the expenditure for the person who is hosting this annual event for the employees. And on the output side, when such a facility is being utilized by an individual employee, so employer and employee being related persons, and 50,000 is the outer limit of gifts or largesses the company can extend to its employees, will there be any kind of a GST on such a annual outing will be the question. So my take on this is that annual outing is not part of your employment contract. It is something which the company wants to indulge and incurs. So hence, we should not be putting a tax color to it. Certainly, the person who is organizing this event, that annual event, sorry, is going to give a GST invoice to the company, on which the company should recognize the GST as expense. And on the output side, when the company is asking its employees to avail this annual outing facility, there should not be any GST. That is the justification of it. Entire thing will be taken out of the GST purview. So it need not be added to that 50,000 rupees gift aggregation calculation. And 50,000 aggregate calculation is per employee per year. It is not for all employees put together in a year. Per employee, 50,000 rupees in a year. So new joiner shifting expenses. So normally this new joiner shifting expenses will always be part of your employment contract, wherein it will be clearly told that since you are coming from some other location, that we are going to pay you some fixed money or the actual expenditure, whichever they as per the company policy, as shifting expenses allowances to you. So on such a thing, there will not be any GST. So long-time service awards to the employees. Sometimes the companies will be giving this kind of long-time service awards to the companies. So again, here also that we have to examine this from two aspects. One, when the company is buying these awards to be given to the employees, whether they can avail input credit. So it is not for furtherance of their business, but certainly HR take will be different, that they will say that such kind of incentives are going to encourage the employees for their longer stay. So why we cannot take an argument? It is in furtherance of their business. But unfortunately, the tax guys do not have such kind of a larger hearts to accept such kind of an arguments. And then they say that it is not in or in relation to the manufacturer or the service you are interested in. Hence, you are not entitled for the input credit. So on the input side, when the credit is not denied to you, then on the output side, in the same breath, I say that there should not be any GST. Because once you have brought it outside the GST, then you should not be expecting the GST on the output side for the same event. Buying the awards in bulk by the company, when ITC is denied, when those awards are distributed to the individual employees, then we should not be again coming with an argument that no, now this aspect is going to be taxed. That's not a fair argument for the departments to make. However, that you are certainly going to be given notices for not charging the GST when such awards are given. Say, for example, an expensive watch worth 50,000, 60,000 rupees is given to an employee because that he has served the organization for 25 years. So whether this is going to be taxed or not. If this is the question, then I will say that when the company has purchased this watch from the showroom, 60,000 rupees, the company must have paid the GST. If the company is allowed to take the credit on the input side, then certainly when the company is giving this as a gift to the long serving employee, then they can cut an invoice for 60,000 rupees to the employee, but not collecting any money from the employee. They can say that whatever is the input credit that they have taken, that they will reverse it on the output side. But in the first instance, when the input credit is already denied, then on the output side, it should not be demanded. On the output side, if it is demanded, then certainly input credit should be given. But in either of these scenarios, it is going to be tax neutral for the company, because having taken the credit, that on the output side, when it is given free to the employee, then on the free distribution, I told you already ITC is not eligible, hence you are supposed to reverse it. So you will be reversing it. Rather than that, I say that it is better not to take the credit on the input side, keep it outside the GST purview and give it to the employee and be with it. So it's a way of structuring the transaction. So such position can be taken. Then there are reimbursements of expenses like telephone bills, fuel bills, travel expenses, and petty purchases using the employee credit cards, which often happen. So in all such cases, the company is asking the employee to incur the expenditure and subsequently furnish the proof and get the reimbursement. In such a scenario, the best course of action for the company is to get all the bills in the name of the company, so that the employee will be acting as a pure agent. There is a concept called pure agent under the GST, which says that a pure agent is a person who is going to enter into an agreement with the service recipient, and then he will be merely incurring the expenditure for the service received by the service recipient, and gets the reimbursement thereof. But for any of his commissions and brokerages or the efforts put in by him, he is going to issue a separate invoice on which GST is going to be charged. So a mere reimbursement in the hands of a pure agent is out of the purview of GST. Hence, while reimbursing the telephone bill of an employee, the ideal course would be that he should be under the corporate scheme, and the employee should always get the bill in the name of the company, user being his name. Similarly, when he checks into a hotel, the employee is there, he belongs to XYZ company. So when he checks into the hotel should always write the invoice in the name of XYZ company, user being that particular employee who had checked in on that particular day. If such a bill is there and for which the company employee pays it initially, subsequently company can reimburse the employee, and company can make use of the invoice issued by the service provider. So because that the company's name as a recipient is already there, hence if the credit that we can decide subject to the section 17, that whether it is eligible or not in their hands, and the company can avail the credit wherever it is permitted for them. So in all these reimbursements, ideal course would be to get the invoice in the name of the company, and the employee should always be a payee on behalf of the company. If such an arrangement is there, then the credit is going to be safe in the hands of the company, and there will not be any further GST levy on the output side of it. And to the extent possible, company should refrain their employees in using their personal credit cards for making petty purchases, because in the long term it is going to create a lot of problems. Hence the employees should never be using their own personal credit cards for making purchases in the name of the company. Corporate credit card scheme are that they can create one corporate credit card from which the virtual cards can be generated, and they can meet the requirements of the employee on that particular day. So it can be tackled in such a way. So we have to come out with the alternative ways by using the technology and the latest developments in the technical field to come around these problems, but not to be unnecessarily risking ourselves or the company. Next slide, please. So employee car policy is also a big discussion point, wherein that the company has got several modes in which the employee car policy can be announced. So if the depending on each model the company adopts, that the taxation has to be decided, but it cannot be dealt just as a bullet point over here. But nevertheless, it is one of the important HR initiative. Hence, I thought that it should find a mention over here. But if there are any questions around it, certainly I would love to answer them. But I am not elaborating much on this employee car policy because of the paucity of time at this point. And then loans extended to the employees with or without interest. This is one another issue, wherein that the some companies will be giving some loans or festival advances, which are going to be recovered in some equated monthly installments. So in all such cases, that because it is not forming part of the employment agreement and all, that there is a doubt that whether there can be any kind of a GST levy on it. So we have to structure it as a pure transaction in money, and we have to get away from GST to the extent possible. And then coffee, tea, refreshments also. I suggest that the company should not be availing any credit on those coffee vending machines or the ingredients that the company purchases for to be used for in these coffee vending machines and all, so that it will be out of the GST purview, and then there will not be any kind of a problem on the output side, that how many number of coffees employee had consumed in a year, whether it is exceeding 50,000 rupees limit or not. All that kind of hair splitting need not be given an option to. So it is safer to avoid it on the input side, so that on the output side we need not pay any GST. That's how that we have to look at it. Next slide, please.
Yeah, that's it from your end, sir.
Yes.
We can get into the
So
questions.
now the floor is open. So
Yeah.
Siddharth, my request is that if you can take one out of the other two questions, that I will be able to answer.
Sure. Okay, all right. So let us start off with the Q&A tab first. I think we can finish off that first.
Yeah.
So Mr. Bhaskar has asked ITC on CSR spends. He would require a little more clarity on that end.
Sir, CSR is an activity which is mandated under the law. Because if any company that is into profits, then out of those profits, a certain percentage that he needs to incur as a CSR expenditure is what the law mandates. But unfortunately, that there are adverse decisions on this CSR spend, that it is not in relation to the business. As I told you during the conversation, that the revenue authorities will always take an argument that your CSR spend is not in or in relation to the service or the manufacture the company is indulged in. Hence, the CSR expenses, you are not entitled for the credit. So that is what is the kind of an argument that the people are going to have. So it is not yet settled at a higher forums. As on date, that it is a contentious issue. But if the expenditure is really significant amount, and the credit is naturally going to be significant, in all such cases, I suggest that it is a worth battling it out at a higher forums. That certainly the law and the strength is on your side, because it is mandated under a law that you are incurring the CSR expenditure. Hence, the credit thereon should be allowed in your hands. It is a good argument too, so you can fight it out. Yeah.
Okay. Mr. Bhaskar, hope that answers your question. I will go to the next one from Ms. Lakshmi. Company vehicle maintenance GST input is eligible or not?
Yeah, ma'am. This I have answered in my slides. If you have seen that, that the credit and the other expenditures relating to the motor vehicle are eligible only when its seating capacity is more than 13 seats. Otherwise not.
Yeah. So I'd like to mention that obviously some of the questions might have been answered in the webinar presentation itself.
Not a problem. I'll just
Yeah.
recollect and I'll tell them. Not an
Done,
issue.
sir, done.
Let's
Okay. All right, moving to the next one from Ms. Lakshmi again. LIC input is eligible for vehicle insurance and asset insurance. I believe she's asking if it's eligible.
Yeah. See, the thing is that LIC is Life Insurance Corporation. So life insurance is different, general insurance is different. So motor vehicle insurance and asset insurance come under general insurance. They are not life insurance. So general insurance input credit is eligible. But if it is in relation to the vehicle, as I told you earlier, that the seating capacity and furtherance of business will come into the picture. Hence, it should be understood in that sense.
Okay, moving to the next one from Mr. Sivaraju. Interest collected from employees is transacted in money. So whether GST is applicable on it or not.
Sir, bank interest is again subjected to GST in certain transactions. So even if it is a transaction in money, but GST applicability is there on it. So I think it is pari-materia. GST on interest income is not levied. So here also you can take the argument that the interest component of the equated installments or whatever the company is extending to the employees is not subjected to the GST. So because interest is not covered under the definition of any goods or services as such. So we can take that argument. You are right.
All right, I'll move to the next question, sir.
Hmm.
From Mr. Naresh Kumar, if free food is a part of employment and employer not recovering any amount from employee, then GST leviable on that service to employee and ITC eligibility.
So there is no direct answer to this, which I have covered in my presentation also. The thing is that if you are talking from a company's perspective, then yes, the company is mandated to run a subsidized canteen. That subsidy means it is from 0 to 99.99%, because the Factories Act did not tell that what should be the quantum of subsidy. So some companies are extending the subsidy to 99.9% also. So it can be anything from 0 to 99.9999. That is a subsidy only. The point is that if it is mandated under the Factories Act and you are asking this question, the employer being a factory under the Factories Act, then yes, ITC should be eligible. But once the ITC is eligible, then on the output side, if there is any recovery, then on that recovery that you have to pay the GST. But unfortunately, that if the recovery is partial, then the GST cannot be paid on the partial amounts. GST has to be paid on the full amount. Full amount means how to arrive at that also I have to tell you that you have to do a market survey. So same kind of a food, if it is provided by a hotel nearby, then how much is that they may be charging? So that value you have to adopt, though you may not be recovering so much, but that value you have to adopt only for discharging the GST liability. So on the safe side, I suggest that on the input side, you don't take any credit, so that on the output side, you are not expected to pay any tax. But how far this is going to be acceptable for the department, that we got to see and watch the whole thing in the coming audits which are going to happen. And once the tribunal comes into the picture, how the jurisprudence is going to develop on this particular aspect. But at this point of a time, I suggest that if it is a factory, then factory is mandated under the law to run a subsidized canteen. Hence, you can run it, and since it is mandated, that 17 section 17 will allow you to take the input credit. But if there is any kind of a recovery, then whatever credit you have taken, I think that you may have to better forego. Even if it is given free also, then you have to reverse your input credit. So in either of these cases, you will be losing your credit. So the best course I suggest is not to avail a credit and not to charge on the employee side. I think I have answered, sir.
So Naresh, hope that answers your question. I will move on to the next one. Mr. Mahadev, whether 50K...
I have answered this question during my discussion itself, that
Right.
50,000 is single employee in one single year.
All right. Okay. I'll just quickly take up the same question from Mr. Mahadev. I mean, another question. It's on the chat, sir, since we took up his question.
We'll come to the chat also, because there
Okay.
are lot many. So
All
we'll
right.
complete this open questions.
Okay, done, sir, done. So, Mr. Pushpendu, EDLI input GST is eligible. I'm not sure if I understood this.
Me too.
EDLI input GST is eligible or not. Just trying to understand if EDLI is a terminology or not.
I don't know. Let him explain. In the meanwhile, we can take the next question.
Sure. Mr. Pushpendu, you can put it on the chat for us. Okay. Next question from Mr. Selva Kumar. Is GST applicable on sale of corporate dress, ties, etc. at a subsidized rate or not?
Yes, sir. Because when you are doing a taxable supply, then yes. But unfortunately, that it cannot be at the subsidized rate, but it should be at the market rate, because employer and employee are related parties. Hence, even though say for example, the company got this corporate dress and tie and others at 1,000 rupees, and if they are interested to offer it to the employee at 100 rupees, then how it happens, that this is what I am telling all the time, that you have to analyze on the input side and on the output side. So on the input side, where the company is not into manufacture of these corporate dresses, right? So they must have bought it from a third party. So when they are buying it, then they have paid 1,000 rupees and the GST thereon. But subsequently, while giving to the employees, the company wants to collect only 100 rupees, and then you are asking that how much GST is payable. So my answer to this is, when the company is buying these dresses at 1,000 rupees and the GST thereon, the entire GST is going to be eligible in their hands. So after availing the input credit, now when they are giving it at a subsidized rate to the employee, they may be collecting 100, but they have to pay the tax on 1,000. Because the market value of that particular item is 1,000. The company is kind enough to extend the discount to the employee, but unfortunately, employer and employee being related parties, the 100 rupees subsidized amount what the company is collecting is going to be rejected by the authorities. So they'll insist that you pay it at 1,000. That is the reason in some of the cases I told that you don't take input credit, so that it will be out of the GST purview, and on the output side there is no requirement for you to again charge the tax. But if you have taken the input credit, then on the output side, employer and employee being the related parties, you have to adopt the same pricing, even though your realization is less, but you are supposed to pay the full tax. First, I have answered.
All right. So the next question also, I believe, is the same. ITC is eligible on uniforms provided to employees. Most likely it's the same. So, Mr. Sivaraju, hope the previous answer has answered your question as well. Okay, we can move to the next question from Mr. Annapurni. Insurance for health services, ITC is not eligible. But in this webinar, you said ITC is eligible. Can you please clarify whether it is eligible or not?
I have qualified my statement when I made it, that when there is a situations wherein that the company is into some hazardous materials handling like activities, wherein there are laws which mandate that the employees who are employed on that particular job are to be covered with enough insurance. In all such cases, the input credit on such insurance is going to be eligible in the hands of the company, but not in general that life insurance. So I did not say that life insurance, the company is going to be eligible for the credit, but only when the company is indulging in any hazardous activities for which there is a mandate under any laws that the employees who are employed by that company are to be covered with adequate health insurance and all. In all such cases, the company can always take an argument that it is in or in relation to their furtherance of the business. Hence, input credit is going to be eligible. I hope I have clarified it.
All right. We will move to the next question from Mr. Rohit Swami. Sir, a GST liability on liquidity damages paid by employee under overseas training agreement. Payment is made due to breach of contract.
Rohit sir, question is a bit complicated, but you did not elaborate. To the extent I will try to answer it by trying to understand the whole thing. You are saying GST liability on liquidated damages paid by employee under overseas training agreement. So it seems that the company has nominated an employee for an overseas training and the company made certain payment. But unfortunately, the employee who was put on that job could not complete the training as per the company's requirement, and hence there is a breach of contract. But for breach of contract, there is a clause that the entire amount has to be paid or some additional amount is to be paid. So whether there is going to be any GST liability on it, is it what that you wanted to ask? If you can confirm, maybe that we can proceed on it.
Yes.
So
yes.
just to give your further clarity on this issue, sir. If my understanding is correct, maybe that I will be able to deliver it on it.
Yeah, I'm just seeing if Mr. Rohit is still there in the meeting. Okay, I think he's not there, sir.
Okay, then we will
No
not
problem.
be able to make a hazardous guess and answer it.
Right.
Yeah.
No problem. We'll move to the next question. From Mr. Kuldeep Singh, company assets sold to employee, is it applicable for ITC?
Yes, sir. To the extent possible, I suggest not to sell it to the employees, because whatever is the value the company is going to adopt will be doubted by the authorities, because employer and employee are related parties. Hence, simply the value is going to be rejected by them because of this relation first. So you have to undertake a bigger exercise of establishing that the price adopted is a arm's length price. The relation has not influenced. So if such an exercise can be undertaken by the company, then certainly the company assets can be sold to an employee and applicable GST has to be paid. But you are asking ITC. So this aspect is different from the sale aspect, because sale aspect is on the output side. ITC is on the input side. So what you mean to say, I am thinking, is that when the company has bought these assets, they must have taken the ITC. So when such assets are put to use over a period of time, they got depreciated, are of no use for the company, and are being offered for sale to the employees. If such a scenario is there, then having taken the input credit, you have to go by all those depreciation norms and arrive at the price at which the GST requires to be paid. And if the consideration negotiated with the employee is less than the depreciated value, then depreciated value is the value on which GST is payable, whatever may be the consideration recovered from the employee. But if the consideration recovered from the employee is more than the depreciation value, then on the higher value that the being recovered from the employees, GST is going to be payable. So higher of the depreciated value or the offer price is the price on which GST is payable. Hope I have answered it.
All right.
Yeah.
Moving to the next question from Mr. Okay, let me keep that aside. I was going to read Mr. Rohit's question again. Mr. Mahadev, if recovery is not there, then also GST is required to pay for canteen services.
Sir, this is where I told that even if the recovery is not there also, that because employer and employee being related parties, any taxable supplies made by the employer to the employee are going to be taxed in the absence of recovery also because of the relation. That is the reason I told that when a canteen service is being provided, what you have to see on the input side is whether the company is engaging a outdoor caterer. If the outdoor caterer is buying all the ingredients, cooking the food, and bringing it to the factory and serving to the employees, for which the company is paying the money to him, then the outdoor caterer will be giving a invoice to the company on which there will be a GST levy. So, if the company is going to avail the input credit thereon, then irrespective of whether the company is recovering any money, that's what I told. Even the Factories Act, even if it is mandated, subsidy 0 to 99%, nothing is clear. But even then also, you have to adopt the market value on which GST is payable. So whatever is the input credit you have availed, entire input credit has to be reversed when it is given to the employee. Irrespective of the recovery that you make, it can be 0 to 99.9%, whatever it is.
All right. I hope that answers the question, Mr. Mahadev. Sir, we're just coming back to an old question from Mr. Pushpendu, where we had the confusion of EDLI. So, Employee Deposit Linked Insurance Scheme, that is what EDLI means. He's asking if GST is eligible for the same.
No, but who gives this employee deposit linked insurance? Because the company will not collect any deposits from the employee in order to insure the employees, right? Is it that he is talking about no. I need to have full clarity on the EDLI mechanism, that who is the service provider, who is the service recipient, who is charging the GST, and then we can discuss whether GST is going to be creditable or not.
Mr. Selva has mentioned it is from LIC.
No, if LIC is giving the EDLI policy and employees are depositing money in order to get insured, in what way company is coming into the picture?
Sir, I think if necessary, we can take this post
Yes.
the webinar also. Mr. Pushpendra, I'll be able to connect you with him later, so you can have a mail conversation with him.
Yeah.
So that can be taken care of. Not to worry.
Yes.
Okay. Selva Kumar is saying it's a death insurance scheme. That's what he's mentioned. I'll also take another question from Mr. Pushpendu. Notice pay recovery is not liable to pay tax. Any reference, sir?
Notice pay is any reference means what reference that you want. There is a Chennai High Court decision is there for the service tax regime, and couple of AARs are there which can be googled. But if you want that, maybe that I can send you a couple of links where you can read about it.
Mr. Pushpendu, I'll
notice pay recovery is not subject to GST. Yeah.
So, Mr. Pushpendu, I'll connect you with him after the webinar. Not to worry. Okay, so we can go to the next question from Ms. Annapurni. Now we are paying 5% GST on all the recovery of canteen food from employees and from vendors. Is this right?
See, again, this is a debatable question, madam, because 5% tax applicability is only when you don't avail input credit, but otherwise it is not at 5%. So again, not availing input credit itself is a debatable issue, because for the manufacturing operations, every company will be availing input credits and all that. So whether any input credit is going to be relatable to the canteen activity, or only the canteen related input credits that you should not avail, so that you can adopt a 5% tax rate. So a big debate is going on. There is no clarity at all in the market about this particular issue. It is still under debate because no pronouncement has come from a higher forums on this aspect. So you will be taking a chance, but before that, my suggestion is that you examine on the input side that what is that he is charging you, and whether you are availing any input credit. Then you can think of what is to be done on the output side, because the biggest problem is what, irrespective of what you are doing on the input side, the revenue authorities will say that on the output side that you have to adopt the market value, which will become a bigger issue for you. So you are saying that you are collecting, recovering some amount, whether it is a 100% recovery or a subsidiary recovery. If it is a subsidiary recovery, it is going to be rejected. If it is a 100% recovery, then it is okay to an extent, provided that on the input side also, the vendor is charging you 5%. Then on the output side, you can conveniently charge 5% and be with it, because there is no gain made by the company out of this particular service. That is the whole point of it. First, I have answered you.
All right. So that is it from the Q&A end. There's one specifically, Mr. Sandeep has mentioned components, but I'm not sure. We will go back to the chat now. I think we can take up questions. Let me just scroll up and start off from. Yeah, Mr. Mahadev had again mentioned clarity on GST, ITC availability on employer-related expenses. These had come up before the webinar started, sir. So I'm just reading out to you. If you would like to mention something specifically, you can by stopping me. Second one from Mr. Selva Kumar. Practical issues like applicability of various items, not specifically mentioned in the Act. Example, bond breaking charges.
Bond breaking charges, I told you that it is notice pay.
All right. Another question from Mr. Bhaskar. More clarity on HR related issues so far.
I think we are deliberating that only all this time.
Right. Mr. Sivaraju, just want to know whether the head office expenses need to be distributed to other units under the same PAN.
Yeah, thanks to the famous case that that started from Karnataka only, that the C-suite employees' expenditures are to be distributed to the other units under the same PAN is still a burning topic. Yes, it requires to be done. I am referring to the Columbia Asia decision.
Mr. Sivaraj, I hope that answers your question. I'll move on to the next one from Mr. Ismail Mohammed. ITC eligibility on canteen maintenance as per Factory Act.
Factory Act does not mandate you to maintain a canteen, but yeah, you have to run a subsidized canteen. I think that you are referring to that. I think that we had enough discussion on this canteen, Factory Act and all that. So if you have any specific question, I can answer it.
All right. I'll move on to the next question in the meantime from Mr. Abhishek Dalvi. Can you please tell us for how many days we can hold the incentive bonus if it is part of CTC? Now, this is a more HR oriented question, sir.
Yeah.
All right. So I think that you don't have to answer, right? We'll go on to the next one. Okay. Mr. Bhaskar Jagannathan's question. Need more clarity on joining bonus PL.
Yes. Joining bonus, please, which I have explained.
Right. Okay. I'll move on to the next few questions from Mr. Rohit. Please apprise on liquidity damages.
Same,
okay, he's already
same. That he had posted in both the places, but it did not elaborate.
Right. Mr. Bhaskar's question. I'm not sure if this is answered already, sir. CSR expenses are also mandated under company law.
Yeah. Answer.
Moving on to Marimuthu sir's question. Foreign person who is a resident in India and he or she is appointed as a whole-time director in an Indian company. Indian company assigned some job to that whole-time director and company agreeing to pay salary in USD monthly. Please clarify the following pointers. Whether the above payment will be treated as salary or director fees under GST, whether GST will be levied on payment made to that foreign person.
See, you are yourself making contradictory statements. You said that there is a foreign guy who has now residing in India, and he has been nominated as a full-time director of the company. And then you have appointed him for a salary, and as part of his appointment, that you have assigned some task to him. So you are now asking whether that salary is subject to GST. So salary is not subject to GST. That is the simple answer to it. And whether GST is levied on payment made to that foreign person. I think that payment made is other than salary. If you are making it, then you have to put a color to it. Is it a sitting fee for him because that he sits in the board of directors meeting, or that it is a part of his salary? Means salary is not going to be subject to GST. Other than salary, you have to identify what is that expense head. Then we can have a discussion on it.
All right. So, in the meantime, I just want to unmute Mr. Bhaskar as he's been asking for a while. He has a question for you. So, let me just unmute him. And after that, we can come back to questions. Mr. Bhaskar, I have allowed you to unmute. Let me just ask you to unmute again. You should be able to unmute, sir.
Yeah.
Okay.
Sir, good evening. Thank you very much. And it is a very useful session. Sir, I have one practical query. I need your answer. See, my company is going to recruit a senior management guy who is working in another company.
Okay.
So there he is drawing almost 5 lakhs as a salary.
Okay.
And for this terms of agreement is 3 months notice he has to give before he release the company.
Right.
So what we require is we need him urgently and we want to take him.
Right.
So we are ready to pay the 5 lakhs, whatever the notice pay is there for him. And when he raises the bill, the company will raise the bill along with the GST of 18%.
Why?
Oh, they are raising.
Why? Why they are raising?
They are raising along with the 18%. My company is asking,
Huh.
we cannot take the input credit for that transaction.
Correct.
What is alternate?
No, sir. See, the thing is that you have to ask them that is there any service agreement between you two companies that they have to release this person and then you have to recruit it. There is a formal agreement that made, and because of that the service tax levy is coming into the picture. If that is the case, what is the service head?
No, that is a discussion level. What they are given is we cannot release him without payment of 3 months salary. So
That's
when
right.
we
So
agree,
the 3 months salary may be coming to 5 lakhs.
Yeah.
That is understood.
Yeah.
So when, see sir, I'll tell you one thing, simple case. Then the 5 lakhs salary is given to an employee because that we want to get rid of him immediately. You are a particular employee in a financial year served your company for 6 months.
yeah,
Suddenly you have taken a call. No, let us fire him. So as per the agreement, that 3 months of salary you have to give him so that you can relieve him today itself.
yeah.
So in such a scenario, when you are giving that 3 months of salary to him, when you issue Form 16, for how many months of salary will be reflected in the Form 16, sir?
No, sir, that is what my
6 months he had already served.
Yes.
3 months salary you are paying him on today itself.
Correct.
So your Form 16 will reflect 9 months of salary, sir.
Okay.
So when it is taken the color of salary income, and all TDS and everything is done as salary income only under the income tax law,
Yeah.
how suddenly it can take a color of service income? Because TDS for service income is different. TDS for salary income is different.
Okay.
So when TDS is already collected as a salary on that notice pay money also,
Yeah.
how again you can subject it to service and service tax thereon?
Sir, for considering all this, my company require him immediately. We are ready to pay the money.
See,
Company
this is what
asking-
I'm telling, sir. The
Yeah.
thing is that when you ask me what is the law, this is what it is. What is in practice that I have to do, because that I have to get a person, if you are ready to forego, you forego it, but that will be set as a precedent. And for all those people who are leaving your company by paying the notice pay and all, you will be subjected to GST music also. Because in one case, when you are taken in a hurry a position, that holds good for you for all your other cases also.
Sir, my alternate thinking is I can ask my recruiter to take him, and then I can pay through the consultant. When consultant raises a bill, can I able to take ITC on that?
Yeah, manpower supply services, you can take credit.
No. This is the way that we can solve the problem. No?
Yeah,
As if
so
I am,
along with the 5 lakhs at the GST, your
Yeah.
consultant will take the bill and he will pay to the company.
yes,
And consultant will add his own charges and he will give you another bill, which is going to be for manpower supply, which you will pay. That's okay.
yeah, this is what we thought of doing this. Just I
Yes.
want to have clarity with you
Yeah,
that
yeah,
it is
yeah. No
eligible.
problem. You can.
Yeah, thank you. Thank you, sir.
Yeah, thank you, Mr. Bhaskar. All right, going back to the questions, I will just scroll up. Yeah, so a question from Miss Annapurni.
I think we have answered that.
Yeah, that is answered. Required clarification on ITC. Yeah, all that is answered. Sale of corporate does. Okay, all of this is actually put in the Q&A. Looks like so
Yeah,
answered already.
most of that, yes.
Yeah, we'll go to Mr. Sanjeev Ghosh's question. Can you please explain about cross charges under GST? When HO is providing services for branches and factory, then what are the components to be considered for computing cross charging?
See, this question has got nothing to do with today's subject, but however that I am answering in the interest of the parties. If he is there, then it would have been better, but I don't see Sanjeev being around. See, the cross charges means whatever is the services that the company may be giving to the branch, like sharing of the ERP. Like the company may be having SAP or Oracle for running their ERP and all. So that ERP incidents comes to the head office only, and the same ERP will be used by the branches also. So in such a case, that whatever is the portion of the ERP being shared, that is going to come under the cross charge. Then, as per the Columbia Asia decision, all C-suite employees, like the CEO, is not may be sitting in head office, but his services are rendered even to the branches also. So Columbia Asia decision says the CEO's salary has to be apportioned across all locations. Similarly, CFO, CTO, CXO. So all these C-suite employees who are going to be common. Similarly, those in the admin and centralized accounting, payroll processing, all these guys' services are to be apportioned across all locations. Similarly, the annual audit fee paid to the statutory auditors, because when the statutory auditor finalizes the accounts and gives the bill, it is for the branches also. So all such expenditures. So one got to see what is the company's operations and then identify the various heads which are to be cross-charged between head office and the branch offices. Okay.
All right. And Mr. Sanjeev is actually here, sir. He is there in the
Okay. So
webinar.
if he has any further, then he can ask.
Yeah. Also, Mr. Pushpendu has raised his hand. Mr. Pushpendu, let me know if you want to converse with him directly. I will be able to do that. In the meantime, let me take up a few more questions. Ms. Annapurni again. Sir, just let me know if this is answered already. Need clarity on both ITC on canteen food and transport facilities.
Yeah.
Need...
Answered.
Yeah, right. Mr. Mahadev Power, if recovery is not there, then GST is required to answer. Okay. Coming down to the chat from Mr. Ismail. We are claiming ITC on canteen service by reducing the proportionate ITC against the partial amount collected from employee. So, sir, is this a question, Mr. Ismail? If you would like to elaborate on this, just wanted to know because I just trying to understand what is the question here, sir. So, if you can elaborate on that end, we will take up. So, are you mentioning that you are claiming like this? So, Mr. Ismail, if you can give a little more clarity on this. I just want to know what is the question here, sir, in the one that you've put out. Meantime, I will go back to Q&A and take up Ms. Annapurni's question. Canteen invoice charging 5% GST and company is not taking ITC on the same. Subsidized rate from employees and full rate from vendors. For all the recovery, GST payment is 5% that we are paying.
No, but this is not the correct practice, because subsidized rate from employees, that is also to be paid at a full rate only. Because employer being related parties, that you cannot adopt the subsidized rate, it should be full. And from 1718 till now, that you are paying GST on notice pay recovery as advised by your statutory auditor. What we are doing is wrong, absolutely. You need not pay GST on the notice pay recoveries. I answered both our questions.
Yeah, got it, sir, got it. All right, that brings us to the conclusion. We've answered all the questions. I'd like to see if there are any further questions. We'll just wait for another 5 minutes, sir, if that's okay with you. And Mr. Pushpendu, please let us know if you would like to talk to Mr. Akella. Since you had raised your hand, I just wanted to check. All right, Mr. Ismail, if you would like to elaborate on that question, claiming ITC on canteen service by reducing proportionate ITC against partial amount collected from employee. Audience, if there are any other questions, we will take it up now. Yes, Mr. Ismail, we'll be able to allow you to talk. I'll give you the permissions. Just give me 1 minute. Yeah, you should be able to talk now. Mr. Ismail, can you unmute? You should be able to talk after that.
Hello.
Yeah, we can hear you.
Sir, good evening, sir.
Good evening. Tell me, sir.
Sir, very good session, sir. We have got many more clarity on this issue, sir. Mainly this HR related activities, sir. In relation to canteen, sir, actually our canteen is as per Factory Act only, but outsider is we have engaged outside from outside contractor. He is registered under GST and paying 12% GST on his bill, sir.
So he is availing input credit.
We are availing input credit on that.
No. He is availing input credit. That is the reason he is not charging you.
Yes, sir.
Subsidized rate, he is charging 12%. Fine.
Correct,
Okay.
sir. Correct.
Yeah.
We are also availing input credit for that. For nominal charges, we are collecting from employees, sir, as per trade union agreement.
Okay.
Per meal, for example, 10 rupees we are collecting per meal. For that monthly basis, whatever GST involved on the 10 rupees, net of GST we are taking as ITC, sir, from canteen service bill. Means 10 rupees, suppose it is a 10 rupees we are collected, 12% GST involved on that.
Okay.
That 12% we are reducing from canteen service bill. We are taking net ITC, sir, the month to month. Is it okay, sir?
That only requires a little of clarification from me. What do you mean by net? See, 10 rupees he is charging you per meal. 1 rupee 20 paise is the GST.
Yes, sir. Canteen contractor is charging as per market rate, sir.
Right.
Per meal, okay?
Right.
On that he is charging 12% GST.
That's right. That's what I'm telling.
Sir.
So 10 rupees he is charging you. Let it be 10 rupees be the market value.
Correct.
1 rupee 20 paisa he is charging you.
Yes.
Okay. Now,
sir, we are collecting as a nominal agreement between union and management. If it is a 10 rupees normal charge, we are collecting only 1 rupee for that meal, sir.
Okay, from the employees.
From the employee.
And you are charging 12 paise on it.
We are not charging, sir. Actually, on that 1 rupee, the ITC bill every month we are paying to contractor, sir. Whatever bill. From that bill, whatever amount we have collected from employee, we are reducing that amount and recalculating GST and taking.
No. You are doing a lot of mistakes or a small issue, sir.
Sir.
Please stop this practice immediately.
Okay. Sir.
You should not be doing it. See, what we are dealing with is a transaction tax.
Okay.
That is the reason when you are hearing my presentation and all, I am always talking on one particular point, bullet point. I am talking on two sides. On the input side, what is to be done. On the output side, what is required to be done.
Yes, sir.
So here, what you have done, that input output you are netting off in your hands, which is not permissible under the GST law.
Sir.
So on the input side, on 10 rupees, 1 rupee 20 paise, when your vendor has charged you, if you are interested in taking the credit, you take it. No problem, because yours is a factory canteen, hence you are entitled for input credit.
Yes.
No problem at all. On the output side, when you are collecting only 1 rupee from the employee, but nevertheless, the cost of food is 10 rupees. So 1 rupee value, what you are collecting from the employee is influenced by your relation with the employee. GST law says employer and employee are related parties, hence don't go by the collection that is being made, or not having a collection also, but it should be as per the market value. So on 10 rupees only, you have to pay 1 rupee 20 paise on the employee recovery. Actually, you are collecting 1 rupee. But you end up paying 1 rupee 20 paise as GST. Because that is what is the credit you have taken against this meal, right?
Correct.
So the entire credit has to be reversed. You cannot keep something out of it. So in the process that what you are doing, that since you have collected 1 rupee, on the net value means 10 rupees and 1 rupee 20 paise, 11 rupee 20 paise, you are lessening 1 rupee, and that's how that you are availing is not the correct way of doing it. It should be knocked off, not in at your level and then come into the GST return. It should be done in such a way that on the input side, you make it a clean slate. On the output side, if something is payable, that you have to pay. So when you examine on the output side, because of your relation, the price is influenced. That is the reason 1 rupee, it is 10 rupee value product is being given at 1 rupee. So the 1 rupee will be rejected. So it should be given at 10 rupees only for tax purposes at least. You may not be collecting 10 rupees from your employee. You continue to collect 1 rupee. But what you have to pay to the government is GST on 10 rupees at 12%, that is 1.2 rupees. I think I'm clear.
Yes, sir. It is very clear, sir. Thank you, sir.
Thank you.
Right. Let me just. Okay, great. So any other questions, audience? Okay, so I'd also like to mention that in the post-webinar mailer, those of you who are interested to converse with Mr. Akella on a one-to-one basis, I'll be able to do that. So the mail ID will be shared, and we will also be sharing the presentation for your reference. So with that, I think we have come to a conclusion. We in fact have taken 1 hour additional to the proposed timing. So I'm sure all the questions are answered. I'm sure the audience have a lot of insight from the presentation and the Q&A itself, sir. So thanks a lot for your time, Mr. Akella.
Thank you.
So on that note, we will end the session for today. And those of them who have shown interest for our solution demo, we will reach out to you on a one-to-one basis separately.
Thank you.
Thank you all. And we look forward to seeing you all on yet another webinar with Mr. Akella next month. Thank you all and have a wonderful evening.
Thank you.
Thank you, Mr. Akella.